Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin Economic Calendar. I'm Mauricio Di Bartolomeo, co-founder of Ledin, and as with every week, we bring you the news and analysis you need to start the week off right in Bitcoin. Today is Tuesday, November the 9th, and we've had an action-packed week in the markets and a very interesting one up ahead. In today's issue, we're going to be talking about an update in the Bitcoin ETF space. The SEC could potentially be approving another type of Bitcoin ETF this week. We're going to look at what that may be and how it could impact markets. We're also going to break down this all-time high party that we seem to be having with a lot of asset classes reaching their historical maximums in terms of price. And there are some asset classes which are not at their all-time highs. So we're going to break down that price action and what, if any, clues we could draw from it. And last but certainly not least, we get a fresh new inflation reading out of the US for the month of October. There's some high expectations there for that number, and we're going to talk about how that could impact markets. So grab your coffees. It's going to be a great one. So starting as we usually do with Bitcoin, we see that Bitcoin closed last week higher by 3.16%, closing Sunday at $63,300, and it finds itself pretty much at an all-time high at the moment, trading at 67,888. As we saw, this is the formation that we highlighted last week, this bull flag, as it's referred to in the technical world. And we see that the weekly close from Sunday was basically bumping right up against this formation. And we're seeing some continuation from that so far this week. This optimism and positivity could have something to do with the activity that is happening in the Bitcoin ETF space. And let's pop up the headline that we are making reference to. The Bitcoin ETF world, as we've mentioned, and as we've been writing here at length, has been incredibly active since the first application got approved. And last week, there were two very noticeable events. The article you have on your screen right now highlights that the SEC is now seeking commentary on Grayscale's GBTC ETF proposal. So first off, essentially what happened was the SEC issued a notice requesting comments on GBTC's application to become a spot Bitcoin ETF to list on the New York Stock Exchange. The request for comments does not mean that the fund will get approved, but it is a step in the right direction. The SEC has started the clock and will now have to make a decision on the Grayscale Bitcoin application, and the approval could come potentially on December 24th of this year. So it could be an exciting holiday season. Now, further on that, there's a couple of pending Bitcoin applications, and we're going to go through a few of them. So the first one is there's a couple of pending spot Bitcoin ETF applications. The SEC has also issued a request for comments for the VanEck's application for their spot Bitcoin ETF. The request for comments for the application from VanEck's was issued in June of this year. So the GBTC request for comments is not the first time this happens for a spot Bitcoin ETF. However, the VanEck's application, which was submitted earlier on, could potentially be hearing a decision as early as November 14th, so this week. Elsewhere in the ETF world, we saw, this is a headline that you have from essentially another Bitcoin ETF application, and this headline highlights that there was an application introduced for a short Bitcoin ETF based on futures contracts. This application was submitted by a group called Direction, and the application was quickly withdrawn, which signals that the SEC maintains its conservative stance on more exotic Bitcoin ETFs for now. So it looks as though the next milestone for Bitcoin ETFs will be this spot Bitcoin ETFs. So more on this in our What's Ahead section. And moving on to our analysis of the S&P 500, as many predicted, the Fed started or announced that it would start tapering last week at its FOMC meeting. And what's been interesting is that the price action so far does not seem to be consistent with previous tapering efforts. All major equity indexes or indices in the US are at all-time highs, even the Russell 2000, which we will get into shortly. And the bond yields on the 10-year and the 30-year notes, US Treasuries, are dropping precipitously, which is somewhat inconsistent with what you would expect to hear on the back of a tapering announcement from the Federal Reserve. The article you have on your screen right now highlights that, this is from CNBC, and it highlights that the taper could be good for the markets according to S&P 500 history, but let's break that down for a second. Last week, let's just go back to the chart just because it's very impressive. Last week, the S&P 500 rallied to a fresh new all-time high, closing higher by 1.79% at 4,694 points. We see it rallying again this morning. Looking at the other indices, we see that the Dow Jones also, just popping that here, it roared to a new all-time high of its own, up 1.42% at 36,327. And the NASDAQ was not left out of the party either. It rose 3.21% at 16,359 points. All of these indexes are at all-time highs. The most insightful market action from last week was probably the Russell 2000 small cap index, which we've tracked here quite at length. And we saw that decidedly roared to a new all-time high, up 6.09% for the week. And these two lines, this resistance on the Russell 2000 at the 2350 line of levels, we've been essentially tracking this since all the way back in March. And just as a reminder, this rally from the Russell 2000 beyond these levels is what Fundstrat analyst Tom Lee was looking at as confirmation for a potential move ahead, a broader move up on most equities. The price action that we're seeing on the Russell 2000 might actually have to do with some of the news that's coming out of the jobs market. So as we've tracked here and we've discussed here in several issues in the past, small companies were notoriously or noticeably hurting with the tight labor market, given that they didn't have the same allure or resources to draw talent that they needed to grow. So again, a tight labor market has been seen as a constraint. And last week we saw some encouraging signs out of the U.S. labor market. So this combined with equity markets digesting the tapering announcement is seemingly quite well, could set the stage for potentially another broad-based move higher. Looking at the bond market and how that reacted after the tapering announcement is also interesting. If we look at the yield on the 10-year note, we saw that it dropped last week by a whopping 6.8%. And if we look at the yield on the 30-year note, it also dropped by 2.88% on the back of a tapering announcement. Now, what this may suggest is that what this price action may be suggesting is that the bond markets could have gotten ahead of themselves and as far as like rising interest rates and are currently adjusting expectations. And to set that or to illustrate this, we're going to look at the 10-year note and how it's rallied from essentially a year to date now. And so we're going to find the this is a November 2nd chart from 2020. And let's look at where the yields, or how big the yields had rallied up until last week. So as you can see here, the bond yields on the 10-year US Treasury note from a year ago to essentially this week had rallied by 91.89%. So essentially 100% rally or 90% rally on the interest rates of these bonds in a year. So what this price action could be suggesting is that in fact, the bond market could have gotten ahead of itself and it's now just correcting some expectations. So that is, we thought that was important to highlight as far as how much just these bond yields have rallied. Now, looking beyond the current tapering, the price action in the bond markets could be suggesting that the bond market is seeing a very low probability of the US being able to raise interest rates in a meaningful way. And even after the tapering of the bond purchases is done, the Fed may not be able to raise rates or let rates rise further. Now, while things look positive in the equity markets, there is a risk of an external negative event that could drive markets lower. So, something that isn't in people's models at the moment. And investors, what's happening right now is that the Fed is essentially decidedly saying they're going to remove this easy monetary policy, this accommodative stance that they've been holding for quite some time. And some major investors are essentially placing their positions not necessarily based on price action, but based on Fed action. So with the Fed on its path to removing some of these bond purchases, if we are hit by an external negative event, we may have a significant down move until the Fed decides to, decidedly step back in. So again, this is just an external risk probability that we wanted to highlight, given that when the Fed is moving towards a sort of less accommodative stance, it is likely that people may not be willing to just jump right back on board if we see something negative come into the markets. Moving over to gold, we see that gold prices benefited from the moves in the bond markets. The drop in yields on US Treasury bonds compressed the real returns of these US Treasury bonds, which typically favors the gold markets. And that helped gold, as we can see, finish last week higher by 1.9% at $1,816 per ounce. We see that again, it seems to be having some continuation this morning, or so far this week, up 37 base points. Looking at the US dollar, just popping up the US dollar index, we see that the dollar index was essentially flat last week. It's showing a little bit of weakness this morning, and flat dollar typically helps or is neutral to most commodities. And let's just take a look at oil, which, as we know, has been soaring for the last few months. But as you can see, last week they dropped for the second consecutive week. So again, encouraging signs as far as this rally seems to find some stability and not running away further. As we know, rising oil prices typically flow down as a concern for future higher inflation. So again, this is likely good news in the markets given so much hype around inflation we had over the last few weeks. Looking at what could be the next catalyst for gold, we see that there is, as we mentioned in the headline, we're going to be getting a new reading of the consumer price index in the United States for October. What this is essentially means, this is an inflation, checking in on inflation for the United States. So this could be the next catalyst for gold and some commodities. The commodities is essentially what we are seeing as far as price inflation out of the US. Moving over to our DeFi analysis, we see that it was an action-packed week in the DeFi world. Ethereum reached a fresh all-time high on Monday, just popping up the chart. So as you can see, Ethereum reached a new all-time high last week, finding itself at new all-time highs again this morning. The move from last week brought Ethereum higher by 7.68% to 4,617. And the move so far this week has Ethereum up by another 3.13% at currently trading at 4,761. Meanwhile, and just again, taking a look at the DeFi index for a second, we see that the DeFi index actually had a pretty positive week for itself last week, up 12.18%, and we're seeing it somewhat flat this morning. As we can see, though, the DeFi index is one of the very few asset classes that is not in fresh new all-time highs. In fact, it is below its previous all-time highs from back in May. We are going to break down this in more detail shortly. Now, looking at Solana, which has been, as we know, making some waves recently. It is also at it also reached a new all-time high last week, and it is up this year by a whopping 17,000%. It also has surpassed Cardano and Tether to become the fourth largest crypto asset by market capitalization. It is trading at roughly $75 billion in market capitalization. Also this week, it is the Solana Breakpoint Conference in Portugal, taking place in Lisbon. And so the short-term excitement around this asset and this protocol do not seem to be fading. So on the flip side, the DeFi index is doing well, but it is not doing as well as layer one protocols such as Ethereum and Bitcoin. This underperformance, and this the article you have on your screen kind of highlights this. This relative underperformance could still be attributed to DeFi exploits that we've been seeing. The total amount that this article was published by The Block this week, and it states that the total amount of funds stolen through DeFi hacks and attacks has reached $680 million so far this year. And there have been more than 70 exploits that have taken place in the DeFi landscape. And this is according to the block's data dashboard. And so it looks as, even though it still looks like DeFi activity continues to evolve, the growth does not seem to be accruing to the DeFi tokens in the same way that it had in the past. And this is highlighted in part by the price action that we're seeing in the DeFi index. So as we know, the components of this index are largely DeFi protocol tokens. And these, this asset is essentially, this index is nowhere near its all-time highs. And we can see this with the DeFi index, as again, comparing it to Bitcoin or Ethereum or even Solana, which all find themselves at all-time highs. However, this is actually even more evident if we highlight an asset or a token like the compound token. As we can see, not only is that not trading near its all-time highs, but it's actually trading 60% below its all-time high. So again, this relative underperformance of DeFi tokens could be related to the fact that the value is just not accruing in these tokens. It seems like people are just getting these tokens and selling them so that they can buy more layer one protocol assets. So interesting trend, and we will keep our eye on it. And moving on to our Bitcoin mining difficulty commentary, the next Bitcoin difficulty adjustment is expected to occur in about 4 days' time, and it is expected to bring difficulty up by 3.22% to 22.35 terahashes. As we have seen, there's been a steady increase in difficulty since the China mining ban, and this is the trend that continues. It doesn't seem to be stopping. And we now find ourselves at just 10% away from our all-time high in hash rate for the Bitcoin network, which is positive news. Checking in on the mempool, we see that the mempool remains quite similar to where it's been for the last few months. Transaction times and costs are pretty optimal to be transacting on chain right now. And as always, we leave you with what's ahead for the week. As we mentioned at the start, this week we'll get a temperature check on US inflation data with the CPI print that comes out this week for the month of October. Now that the Fed has officially began its tapering process of the bond of its bond purchases, investors will continue to keep their eyes on inflation, as it seems to be the only thing that everyone's talking about nowadays. So everybody is pretty fixated on these numbers and how they could affect their portfolios. So there could be some interesting moves once this number comes out. We're going to break down what the expectation is for that number and when it comes out later in the week. And on the other hand, looking at the Bitcoin technology side, Bitcoin is primed to be upgraded this week with a Taproot activation, which is a much awaited software update that will add privacy, security, and smart contract features to the Bitcoin network. So as always, we wrap up with a summary of the important key economic data that we're going to get through the week. Today on Tuesday at 8:30 a.m. Eastern, we get the producer price index in the United States. As we know, this is often seen as a predecessor for future inflation. On Wednesday at 8:30 a.m. Eastern, we get initial jobless claims. Also at 8:30 a.m. Eastern, we get a consumer price reading index for the month of October, as well as the core CPI, which is the CPI excluding food and inflation. As far as the inflation, the major inflation report, which is the CPI read, the expectation here is for a 0.6% month over month increase, which would put annualized inflation at a whopping 7.2% in the United States. Given that the Fed has started tapering its efforts, the market would likely celebrate if the inflation number came in below expectations. On Friday, later this week, 10 a.m. Eastern, we get job openings in the United States. Again, that labor market in the United States seems to be improving, so it'll be interesting to see how that continues to evolve. And last but certainly not least, this Sunday on block 709,632, Taproot will activate for Bitcoin. So it's going to be a very action-packed week. We are finding ourselves in all-time highs, like we mentioned, in most major asset classes. So we're excited for the week ahead, and we'll keep you posted right here on the calendar and through our social media at Hodl with Ledin. If you enjoyed the show, if you learned something, and if you want to share it with your friends, I welcome you to like it, subscribe to the channel, and send it to your friends and family. If you don't yet have a Ledn account, I welcome you to check out ledn.io and see how you can start earning up to 9.5% on your USDC and up to 6.25% on your first Bitcoin. We are also giving away 1 Bitcoin for the month of November through our referral program. You can check more of those details on our website to see if your country qualifies and how you can basically participate. And last but certainly not least, check out ledn.io and see how you can. We also have the best rates for Bitcoin backed loans if you need liquidity but don't want to sell your stack. Thank you, everybody. Have a wonderful week and see you next time.